Hey, Stefano. Welcome to the podcast. How are you doing today?
Hey, Utkarsh, thank you so much for having me. I'm doing great. I'm super excited about this conversation.
Been a while. You've been to McKinsey after INSEAD, and there was, I believe, BP, BHP in between, and now you're in the crypto space, leading LongHash VC. Walk me through, how you entered Web3.
Yeah, no, it's quite a circuitous journey that I've taken. Yeah, I started my career at BHP where I was doing sales and trading of various commodities. I went to INSEAD, which is where we met, and I was part of the, I guess, majority of people that ended up in consulting, and in my case, I ended up at McKinsey. And I was doing a lot of consulting around technology and around transformation. So I was definitely helping a lot of clients around thinking, around disruption and around how to stay ahead of the curve. Um, I ended up in Web3, I guess partly because I just came across crypto. I think as early as 2015 or so. I bought a little bit of ETH, but at the time it was very hard, so I kind of bought it and forgot about it. And eventually I came back to it around 2020 when I heard about DeFi. And I started to hear about this new parallel financial system being built on the blockchain. And I started to dive into it. I started to play around with it as well. I set up a MetaMask wallet. I started to put in a little bit of money, not really thinking that I would make any money, but just as a way to learn. And I just went into the rabbit hole. I started to understand what people were solving for and realizing that, Web3 was the real technology transformation that was worth paying attention to and being part of. And so through that, I think after a couple of months of just on my own time doing the research, using some of the products, I made the decision to quit McKinsey. Actually, with nothing, with no job or anything, but just with a very strong conviction about the Web3 space. And through the McKinsey network, I found LongHash Ventures. The two founding partners are also McKinsey alumni. And I initially came in, I did a little bit of consulting for them. They were looking for somebody who could come in and help some of the portfolio companies with their pitches to investors, right? And this was kind of the basic McKinsey toolkit around, how to tell a very compelling story about a problem you're solving and how you're solving that problem. And that's how I started to really get involved with LongHash Ventures and with Web3. And it was one of those things that, the deeper I got into it, the more I enjoyed it, which in the end made me go deeper into things with LongHash Ventures. And then eventually, after a few months, they offered me to join them full time. And so that was around early 2021. And here I am today. It's been around 18 months with the firm. So I'm the head of platform, and as head of platform, I lead the accelerator programs and partnerships, which is one part of the business, and then the other part is our two VC funds.
Awesome. What is LongHash Venture Capital's thesis, and how did you arrive at it?
So the overarching thesis is that we have a very strong belief in a multi-chain future. And I would say that thesis then drives, the investments that we make, and then the types of partners that we choose to partner with to run our accelerator programs. How we arrived at that was that very early on, when we were founded around 5 years ago, we had the opportunity to invest in Polkadot, which is one of the so-called layer zeros in the blockchain space. And Polkadot was already building to solve for a multi-chain future by creating a layer underneath various blockchains to be able to connect them and to let them speak to each other. And I think as part of learning about what Polkadot was building, as part of investing into the Polkadot ecosystem, and also as part of running their first global accelerator back in 2019, we started to develop that very strong belief that the future was not going to be won by only one chain or one ecosystem, but rather by it will be a future of multiple chains solving for multiple problems, and they will be all connected to each other in one way or another. And I think we're starting to see that thesis play out now, because I think in the last 12 to 18 months, first of all, we're seeing the rise of the alternative L1. So where around 2020, you had a lot of the early DeFi activity happening on Ethereum. And in 2021, you started to see a lot of the shift to alt ones, such as Solana or Avalanche, for example. And then at the same time, in parallel, looking at other chains that are looking to solve some of Ethereum scalability issues, such as Polygon and some of the optimistic rollup and zero knowledge solutions. The other thing we're also seeing is the rise of other ecosystems. So we saw Polkadot finally launching their parachains at the end of last year. We're seeing a lot of strong activity in the Cosmos ecosystem. We're also seeing the rise of app chains, where effectively those who are building decentralized applications are choosing not to necessarily deploy on an existing chain that, where maybe the features of that change doesn't fully fit to what they need, but actually launching their own chains and setting up in a way that has the same, all the features that are needed. And at the same time, we're also seeing the rise of some of the protocols that are going to connect these chains. And one of them is Axelar, and we are partnering with them to launch their first global accelerator program in a couple of weeks. And so they're basically solving for being able to connect all these different chains, built on different ecosystems, with different languages, but being able to actually connect the applications, the users, and the funds across each other.
Awesome. What's exciting you most about the Web3 chain?
I think what's really exciting is that if you look across a lot of the applications that we believe have found or are in the process of finding product market fit, there is a significant amount of disruption to a lot of traditional business models. And what is particularly exciting to me is that the disruption, or the implications of that disruption, is that there is more power and value being distributed to the users rather than to middlemen that have existed, for decades, if not centuries. So the first example is, if you look at the financial services industry, DeFi started as, I would say, probably the first set of use cases that found product market fit. And where one of the first applications of these concepts were around decentralized exchanges, where instead of using an order book system that traditional exchanges like NASDAQ or the NYSE have used in the past, where you need very large market makers to come in and provide that liquidity, now with these decentralized versions of this, it actually allows anybody to be a market maker or a liquidity provider, and to be able to use their assets, say for example like a token, in a very capital efficient way. And that's sort of the first area that we're seeing being significantly disrupted. But there's actually a lot of areas where we're starting to see this. Another area that we're seeing is around NFTs. And I think a lot of people think like, okay, NFTs are just, these funny JPEG doodles that cost, crazy amounts of money. But we're starting to see quite a few applications where NFTs can help to also disrupt some of these existing business models. And a great example of this is in music NFTs, where there's these new business models created using NFT technology, where you are disrupting the middlemen, which are historically the record labels that were taking a big chunk of the pie, and redistributing that value towards artists and fans. And so these are just a couple of examples, but I think that we're starting to see a lot more innovation in business models thanks to Web3 technologies that are creating like significant disruption in very traditional industries.
Yeah, the value creation and value capture, both aspects are changed by Web3. Do you mind giving us an example of interesting business models that you see?
Yeah, so I think a great example that I like to think, and I touched a little bit on earlier, is when it comes to things like DeFi. And the beauty about some of these applications are that not only does it enable, anybody, regardless of, how many tokens they might have, or how few tokens they have, to participate in capital markets, but it's also very capital efficient. So I'll give you an example. So let's say that in the traditional world, you are, you decide to buy some stocks, right? You buy Apple stocks, or you buy Tesla shares, and you have strong conviction that they're going to keep on innovating and the price will go up. Now, traditionally, if you're an individual, you kind of buy the shares and they just sit in your in your trading account, your brokerage account, and that's kind of the end of it. And the only appreciation comes from the potential upside that you get on the share price. Now, if you look at the way that this actually works in the Web3 world, so let's say that you are a holder of Ethereum tokens, right? So you hold some Ethereum tokens, and you hold them because you have a strong conviction that the value will go up over time. Now, in addition to that capital appreciation of the token, there's other things you can do with that token to generate value for you as an investor, regardless of how many tokens you have. You can have only one Ethereum, you can have 100, you can have 1,000. It doesn't really matter, because everything is permissionless and composable. And so what I mean by that is you can take those tokens and you can go to a platform like, say, Balancer, which is a decentralized exchange and an automated market maker. And what you can do is, let's say you have one Ethereum token, or let's say, maybe to make it a bit easier, let's say you have 10. So you take those 10 Ethereum tokens, you deposit it into Balancer, into one of their liquidity pools, so that other people can actually conduct their trades using your tokens as liquidity, and you start to earn a fee based on that trading activity. So not only are you now capturing the upside from Ethereum going up, but you're also capturing, additional value from your assets being used in a liquidity pool for trading. Now, one interesting thing that Balancer developed with yet another product called Aave is something where, when you deposit your tokens into that liquidity pool, most of the times, only a relatively relatively small percentage of the liquidity pool is actually used on a daily basis for trading. And so what happens is that a lot of that liquidity is sitting there idle. And one of the things that they did with this other platform called Aave, which is a borrowing lending platform, is actually take some of that liquidity and provide it as a lending pool on Aave, which is this other platform. So it's almost as if, like, imagine if the Nasdaq today had a trading pair, which is USD and Tesla stock, and then in addition to that, they take some of those assets in that pool and give it to a bank, let's say, I don't know, Bank of America, and enable Bank of America to actually lend those assets, and then, of course, generate an interest, and then pass it back down to the asset owner, which is the individual. And so it becomes a very capital efficient way for you to own assets and to be able to put those assets to work that just doesn't exist in the traditional financial system.
Love the explanation. What do most people get wrong about Web3?
So I think one of the biggest misconceptions, I would say, is that a lot of people feel like, oh, it's it's just a speculation, and it's a scam, and it's just tokens with zero value. And I was around. I mean, I was a teenager when we had the .com boom and the subsequent bust. And I think similar to that time, of course, there are people that are going to be opportunistic and they're going to try to get in and make a quick buck. And of course, you are going to see hundreds, probably thousands of, companies being set up and try to, do things in a Web3 way, right? Only to eventually crash and to just leave a few winners, in the end. So I think a lot of people have this misconception that it's all a scam, it's a get rich quick scheme, and there's nothing more to it. But I think what a lot of people don't understand is how the technology around smart contracts, tokens, non-fungible tokens, and one thing that people have been talking a lot about in the last probably 6 to 9 months, which is soulbound tokens. All these different technologies actually allow people to do things in very different ways. So I talked a little bit around the permissionless and composability which is, I would say two of the biggest mantras of Web3 around, anybody being able to access these products, anybody being able to interact with these products, build on top of these products, right? But a lot of the other, new business models that it enables, that just the non-Web3 technologies just don't actually enable you to do that, right? And even beyond business models, I think that there's a lot of much wider implications for even for society, right? And for people that Web3 enables. And one example I love to share is around the future of work. And a lot of times when people think about the future of work, people are thinking, oh, we're talking about maybe the gig economy, or we're talking about maybe, a hybrid model where you're working from home 2 days a week and you're working in the office 3 days a week. And my view is that that's a bit of the short-term future of work, but the real future of work is actually going to be enabled by Web3 technology and by things like DAOs, which are decentralized autonomous organizations. And the example I like to give is that the way that we've been working for the past 100 or 200 years is that, we all, develop some knowledge, develop a skill based on our education, based on our upbringing, etc. And we take that knowledge and skill to one organization. And we sign a contract where we say, look, I'm going to provide you with this knowledge or skill, and you're going to reward me every month with a certain amount of money. And we basically do that continuously until I feel like I want to take my skills and knowledge to another place, and I rinse and repeat, right? And generally, and this has been my experience, is that every time I sign a contract with an organization, there's usually a clause that says you're not allowed to work, for money anywhere else, right? So it's actually restricting me as a worker, as an employee, from monetizing my skills further. Now, in the world of DAOs, this is completely different. The way that it generally works is that, you provide a skill or a knowledge, right, to a DAO, so a decentralized autonomous organization, which could be centered around, a DeFi product. It could be centered around maybe an investment thesis. It could be centered around, a particular interest around maybe like, I don't know, art or music or whatever that may be. And the DAO will then reward you for the service, but your contribution to the DAO doesn't preclude you from contributing to other DAOs and being rewarded for that. And I met someone who started doing this. So he's based in Florida, and he just had a kind of an IT administrator role in a small or medium-sized business in Florida. And then he started to get deep into Web3. And he was quite good at analytics, and he started to produce a weekly report for one of these DeFi products on a usage, right? And just to say, oh, people are using this product the most and this feature the most, and these are some of the trends we're seeing. And he just started to do it for free, and the DAO found it very valuable and started to actually reward him for this. So every month they would reward him, a certain amount of tokens, probably worth maybe a couple of $1,000s, for writing this kind of weekly analytical reports. And then he realized that actually he could actually take that approach and do it for other protocols. And the people in the first DAO were not going to tell him not to. And suddenly he was able to monetize his skills across various different companies, if you will, right? And while I don't think that DAOs or that every organization today will become a DAO in the future, I mean, for example, manufacturing, it would be impossible to run as a DAO, but I do think that we are going to see increasingly new types of businesses, especially Web3 native businesses, organized as a DAO and enabling people to contribute to multiple DAOs and be rewarded for it, and really maximize how much you can actually monetize your skills.
Hypothetically, just hypothetically, do you see LongHash Ventures become a DAO?
Potentially. It's a bit challenging given our the way that we're set up, but I think you've definitely seen other investment let's say groups become what's called a venture DAO. I think there's definitely a lot of challenges to solve, right? Because what I would say one of the biggest challenges in DAOs is how do you measure members' contributions, right? And I don't think anybody has figured that out. I think for us, we haven't thought too much into it, so I don't think it's really in the plan right now. But as I said, I think the future holds that a lot of new businesses will potentially become or organize around the DAO.
Yeah, I spoke to Adam Jackson, who runs this company called Brain Trust. And that was very much like your Florida friend. It gives the opportunity for anyone with a skill, a high value skill, to join their DAO, join their network, and sort of monetize them on their terms. Because let's face it, our relationship with work really changed in the last 2 years, even more dramatically than before. But I just want to belabor this a bit more. What specifically about DAOs makes it an attractive tool to consider? We're not here making predictions. We're just like thinking about it from first principles.
I think there's a few things to consider, right? I think number one is that a DAO. What is really a DAO? A DAO is basically a group of people that govern themselves around some predetermined rules, and they incentivize each other to behave according to those rules through a token, right? And so the token, of course, it depends what type of DAO it is, but the token either gives you partial ownership of a particular protocol, or it gives you partial ownership of a portfolio, or potentially if there's no kind of direct ownership or something, maybe it gives you like some potential future ownership or of some kind of something valuable, right? So the whole idea is centered around using token models and what's called tokenomics to incentivize certain behaviors. So I think that's the first one, right? Is that now you have a very clear, very transparent, very measurable way to be able to incentivize people to act in a certain manner, right? So I think that's the first part. I think the second part is that generally DAOs, not all of them are permissionless, I would say, but a good chunk of them are permissionless in the sense that, I can go on any decentralized exchange today, buy tokens of, whichever, DeFi protocol, and I'm effectively now part of the DAO because the token gives me a certain voting power, right? So I can take those tokens, I can participate in governance voting, so I can be very active in decision making. And even if I feel like I'm not well informed enough to participate in that decision making, I can also delegate my tokens to people who I might believe are well informed to take this forward. And there's this whole, different types of mechanisms that incentivize participation in governance and incentivize it again through a token, for people to act in their economic interest, right? I think that the third one is a bit around what I was talking around, changing the relationship between the individual and the organization, right? So today, we go to one organization. I mean, most people go to one organization, they sign a contract, and you can only share your skills within that organization. But I think with DAOs, the beauty is that you can take that skill to multiple places, right? And you can say, well, I've been doing, let's say I'm somebody who is a risk management expert, for example, right? And I've been providing some of that expertise at a decentralized exchange, right? Where I'm kind of helping give some advice on, risk parameters for, a particular pool of a trading pool. And I can take that skill plus the learnings from there that I'm, being rewarded for, and I can go take it to, another decentralized exchange, or I can take it to, maybe a lending platform, which is still within DeFi, but maybe a little bit different. I can also go in and take it to maybe like an NFT lending platform, where again, it's similar but still different, right? And so I think the beauty is that people, I think that it really enables that shift to people being able to maximize the value of their skills and at the same time, have that, what I guess some people call the portfolio career, where like, hey, I'm not just working for this company, I'm actually providing, my skills to 5 or 10 different organizations and being rewarded, for it at all of them. I'm probably actually making more money that way than if I had just, been working at one traditional organization.
Yeah, that brings us to the question that you alluded to in your answer earlier: value distribution and the internet. Web 1, Web 2, Web 3. Web 3 sort of changes the value distribution, value capture. How are you seeing it in the portfolio companies that you've been looking at, or just other industry standards? What does this mean to you? What does perhaps a DAO ecosystem tell you about it?
Yeah, I think that that Web3 definitely is quite a radical departure from what most people have gotten used to over the past 10 to 20 years, right? I think that when Web 1 came around, right, you had all these very primitive websites, and you would just go there and just read stuff, right? So news organizations or maybe governments or even individuals were just publishing stuff on static websites, and you would just go there and read it, and that was kind of the end of it. And then the monetization model was usually through banner ads. And then Web 2 came around, and so you had the rise of things like Google, Amazon, obviously Facebook, and social media. And I think what most people are aware nowadays is that over the past 10 to 20 years, suddenly people and their data have become the product, right? And your data is being monetized, right? I don't think that's a secret at all. At the same time, there's not much you can do unless you completely go off grid. And to be honest, it is very convenient to have Google Maps, and it's very convenient to have Amazon, and it's very convenient to have social media to stay in touch with people around the world. I think Web3 changes that significantly, because I think one of the there's a few tenets around it. I think one is around anonymity, right? And maybe it's not necessarily privacy either, because again, blockchains are completely transparent, but they're also anonymous, and so you don't necessarily have to reveal who you are to the world, right? You can just be a long string of numbers and letters, and people may not know who you are. And I think a lot of some of the use cases we're seeing around Web3 social or DSOC, which is decentralized social media, is around making sure that users are protected and that users don't become the product, right? I mean, the product is a product, but users' data doesn't become the product. So I think that's one area where I think the whole value distribution is going to change away from users giving it away to companies for free, but users basically being able to keep it. But at the same time, I think some people are experimenting with ways for people to monetize their data, right? I mean, some people might be willing to give their data away for a fee. So I could say, hey, I can tell you about my browsing data or my geolocation data or whatever it is, but I want to be compensated for it, right? And I want you to actually pay me a fee for that. So I think it's still a little bit early, but we're definitely hearing about a lot of these ideas happening. I think the other thing around value distribution is that one of the things that we're seeing, and this is very true of the NFT vertical within Web3, is engagement between people, and whether they are fans or consumers or whatnot, and artists or content creators or even consumer brands, right? And so I think that generally in the past, whether you were a content creator or an artist or even one of the major consumer brands, there was always some kind of middleman in between to get to the final consumer, whether it's the consumer of the content or the fan or the consumer of whatever goods or services you're providing. So in the case of artists, you kind of had the record labels, you had iTunes, you have Spotify. These are all kind of the middlemen in between them, and unfortunately, the relationship is typically one way, right? So I'm the artist, I create the music, I upload it to Spotify and iTunes, and then it just streams over to the user, and I'm not able to really engage with that fan directly on a one-on-one basis, right? The same can be said about content creators, right? So if you put out stuff on TikTok and Instagram and YouTube, again, you're going through all these platforms and feeding that content, but really without having that direct relationship with the person. And even for the brands, it's the same thing, right? Because ultimately the brands, most brands, especially when we're talking about online brands, they have to go through, a middleman like an Amazon or a Lazada or something like that. And again, you don't have that direct relationship. And I think with NFTs, it actually enables a much more direct relationship with those people, and it enables fans or consumers of content or whoever to even potentially have a piece of the pie that is being taken away from the middleman. And so a great example of this, I would say, are music NFTs, right? So I think if we think historically, the whole life cycle of a let's say a successful band was that you start playing with your band at a bar or some kind of venue. You hope to be discovered by a big record label. They sign you up and they sign you with a contract that probably says that they're going to take a big chunk of your earnings in perpetuity. And you sign up, and then eventually you become big. You start streaming on all these platforms. You go to you have concerts and all that stuff, and that's kind of it. But it's also very tough because I think that the number of bands that exist that actually end up being successful through that journey is still very, very, very small. Now, the challenge is that before Web3, if I was like a band, right, and I was playing at a bar, yes, you might have your regulars who come in, every whatever Thursday or Friday to listen, and they're cheering for you and all that. But other than them maybe putting $1 into a hat or buying you a drink, there was really no way to, really engage them in a deeper way as a fan and even as a potential investor. Now with NFTs, that totally changes, because if I'm a band and I'm starting out and I see regular fans coming out to my gigs every Friday or whatever it is, I can then say, hey, I'm going to issue, an NFT, and I might choose to charge, right? Because I want to use it as a way to also crowdfund, for going to a bigger gig or to buy new equipment or whatever that may be. But in return, as a fan, especially if you're buying like my first set of NFTs, I'm going to give you some special privileges, right? So first of all is that, if I go to a bigger concert, bigger venue, you'll get automatic tickets, you'll get VIP tickets, all this kind of stuff. But I can also program it in a way that I can actually share with you some of my future revenue and some of my future success. So even for me as a fan, I could be, and I come across sometimes, artists, right? I listen to a lot of stuff on SoundCloud where a lot of these indie artists usually publish. And I come across some of them, and sometimes I'm like, man, I wish I could offer a bit of money just to make sure that they keep going because I like their music, but I don't know how to do it. And even if I put a bit of money now, well, it's an investment that I'll never see a return, right? Now with NFTs, I'm like, hey, I can buy your NFT. I can support you as an artist at a very early stage. And I can also, join you in your future financial success, right? And this is how that value gets redistributed from the middleman, like the record labels, more towards both the fans and the artists.
Thank you for this comprehensive answer, Stefano. Even I would like to support the creators. I don't know if you read my book, the new one, Passion Economy and the Side Hustle Revolution.
Yes,
Focuses a
exactly.
lot on people really trying to build their careers off of their passion. We've discussed a lot of the useful, bullish scenarios for Web3, but there's also a lot of skepticism going around in the ecosystem. What are some things that ecosystem enablers need to get right so that the skepticism eventually goes away? And do you think there is some merit in the skepticism, if any, around Web3?
I think in terms of merit for the skepticism, look, it's natural. It's very natural. And if we go back, 20 to 30 years to when the internet was first starting, I mean, a lot of the great minds of our time were very skeptical about it, right? I think that Paul Krugman and in a way, I feel sorry that everybody picks on him because he's so famous and he made this comment about the internet saying that, look, it's a passing fad. People don't have anything to say to each other, and email is going to die. Email will just replace fax as a way to transmit documents, but it's never going to be more than that, right? And I think it's just natural. It's natural when there's a new technology that is so different to what we're used to, and it creates new new innovations that we don't even know exist yet, right? It's natural to be skeptical. I think at the same time, you know, it is, the industry is in very early days. And so I think a lot of times people's expectations for the industry are, are 5 or 10 or 20 years ahead of them, right? And sometimes people say, oh, I've seen some of these metaverses, decentralized metaverses, and they look pretty horrible. The experience is not nice. Or people say like, oh, the transactions per second of even the fastest blockchain is only a fraction of what Visa or MasterCard can achieve today, right? And those criticisms, I mean, they're certainly true. It's true. But at the same time, it's almost like somebody in the mid to late 90s trying to stream an 8K movie on a 56K dial-up network, right? So I think it's all around aligning the expectations with what the technology is, what it's capable of doing today, and what it could potentially achieve in the future, right? So I think that's one point. I think to your first question around, what does it take to really get over the skeptics? And I would say not just the skeptics, but also the broader population, right? So I generally, I think about this a lot, right? What does it take for us to move beyond, what we call crypto natives, which are people like me who spend, day in and day out breathing and living crypto, 24/7. And how do we really get to onboard the first billion non-crypto native users and beyond? And I think there's 3 things that need to happen that I think people in crypto agree haven't fully happened yet. I think the first one is UI UX. UI UX design in crypto is just horrible. I don't know if it's partly because most of it has been designed by developers and engineers, not designers. And so generally the user experience in crypto is not good. And it's actually scary because a lot of it is around value and around money, right? A lot of it is around, moving money around and using your money on this new technology. And if the way that you're doing it, and if the user journey is not clear and smooth and easy, it becomes very scary and it puts people off. So I think UI UX is something that needs to be solved. And if anything, I think there's a massive demand for user experience design in the crypto space. I think the second one is infrastructure. The reality is that the infrastructure today is still, not fast enough, not scalable enough, right? So we're still, like a lot of critics say, like, oh, well, a lot of the established players can do much better, much faster, cheaper. That's absolutely true. So we still need much better infrastructure to be in place to onboard the next billion users. And I think the third one is what I like to think of as Web3 native business models. And the analogy I like to give to that is that, if you look at, what were some of those business models that the internet enabled that didn't exist before? Number one is Google. Everything around Google, right? So search, Gmail, Maps, all the different services they offer were not, I mean, they're internet native, right? They did not exist before the internet. Amazon both as a e-commerce site, but then also AWS, right? These 2 businesses are internet native businesses, right? And then social media is another one. Social media just did not exist and could not exist without the internet. And so I think we're also waiting to see the same thing happen in the Web3 space. I think we are starting to see with some of the DeFi use cases, with some of the NFT use cases, but we do need to see increasing number of Web3 native business models that are scalable and that survive over time and over bull markets and bear markets. I think if we can nail those 3 in the next few years, then we can onboard the next 1 billion users.
So how do we filter signal from noise? How does one sort of learn to become a better investor in the Web3 ecosystem?
Yeah, I think that's quite interesting. I would say that there's two ways to do it, and they're quite unconventional, because I think that historically, if anybody felt like, okay, I want to be an investor in a new vertical or so, and then so you go do a lot of research or you go to conferences or things like that. I think crypto is quite unique. I think the first one is you have to be on Twitter. Everything in crypto happens on Twitter first. Everything gets announced on Twitter first. All the alpha, all the nuggets of information that can give you an edge over the others, it all happens on Twitter. I never used Twitter before crypto. I felt I had no interest in the platform, and I reluctantly got on it. And now I spend, I would say, half of my day scrolling through Twitter, just learning, about this space. I think the second one is you need to use Web3 products. It's the other way to learn. I think that while as I mentioned, the UI UX is not great, but at the same time, the best way to really learn about the benefits of Web3 technologies is to actually use them, right? So set up a wallet, right? Something like a MetaMask or so. Put in a bit of money, start to use some of these DeFi protocols, buy an NFT, and don't do it thinking that you are going to, get rich overnight, because most likely you're not, but just use it as an investment in your own knowledge, right? And that's exactly what I did. I put in a few $100 in my MetaMask, and then I started just to use decentralized exchanges to buy some tokens. I started to lend some of those tokens, and I had no, I never thought I'd make any money off of it, but it was just more for me to understand, what were these products about? How do they work? And who else is using it? And honestly, I find that, learning by doing is the best way.
Awesome. Stefano, thank you so much for your time. It really was a pleasure learning from you, and we look forward to having you back again.
My absolute pleasure. Thanks again for inviting me, and looking forward to the next conversation.